Good afternoon, everyone. We welcome you back to today's last session of the day. We have already had our previous sessions earlier. We already have completed two sessions till now, and this is the last session, which is a post-market session. And here we will be going into the insights of the Avantel, what the growth it is taking, and how Avantel is growing, and what are the secrets how Avantel have growth 20-25% mark in just few days uh, in the market, right? Market is growing, market is positive as of now. It has made a fifth straight session, and now we will also look at the particular stock Avantel. We will do the 360-degree analysis of the Avantel and let you know what is our analysis on that and how you can gain benefit out of it, this growing stock. So, though for those who don't know me, my name is Aditya. I am your analyst for today's live session, and I mostly focuses on fundamental analysis, and I also focuses on volume based strategy, and also all the aspects which are available in fundamental analysis. We analyze all the income statement, which shows the efficiency in the company, the balance sheet which shows the assets and liabilities part, the cash flow, the company is growing or not, the cash flow is okay or not, it is in positive or negative. And second, and at after that we go for the industry analysis, we do the macroeconomic analysis on that, and after that we do the SWOT analysis, the strength, weakness, right, opportunities, threat analysis. And after that we come to a conclusion that what are the future outlook of a stock could be, and what will be the conclusion, what will be the investment decision we will be making. So as of now you are seeing that we will just go through the markets what we have performed. We will just refresh it. Yeah, so as of now you can see most of our stocks are positive, like it's a mixed of combination as of now. rbl bank RBL Bank is up by 0.47%. National Fertilizer is up by 0.75%. Avantel is up by 0.72%. Right? Dev Plastic Industries is down by 1.42%. Right? Dev Plastic making a high of 315 previously is going down a bit. So we will look what are its concerns we are having as of now. And for Hindustan Oil Exploration, it is negative 0.89. So Hindustan Oil Exploration is struggling as of now, and we have to look what are its prospects that we can think of it and it can grow. And coming to the Green Bharat, Ganesh Green Bharat Limited (GGBL) is doing great. It is performing well, and we will look what it stories it holds, right? What stories it holds, and we will analyze IP rings also. Like previous session, we have analyzed the REP rings, the Arcade Ply. We will do the fundamental analysis of Avantel today, not Arcade Ply. Correct. Arcade Ply is positive. We have already done the deep fundamental analysis for Arcade Ply. But today we will do the deep fundamental analysis for Avantel. Annapurna Swadist, we will do the analysis for that too. Now, coming to the overall performance, we have as of now, so it was a mixed balance in our portfolio. The stocks which we are holding is having a mixed reaction. You can see overall here, we have also explained it here, right? And the market cap, the P of the stocks, these few stocks which P are not available is due to the it's fall under the small cap, and it is not, the P is not generated for it, right, from this side. But we can get the P once we go deep down into it, and once we come out with the valuation, we will be getting the P. Here it is not given. So we can see our sectors are finance. The two are from finance. One is from process industries. Two is from process industry. Two are from producer, manufacturer, electronic, technology, energy, millions, consumer, automobile. So we have a mixed of sector as of now. 6 7 sectors are in portfolio. combined combination of 8 to 10 stocks. So it is a very diverse holding we are having as of now, and the performance is also very good, right? If you look at the for performance of this stock, um, for the 1 week, if you see the performances of this stock for 1 week, we have RBL Bank positive 10.22%. National Fertilizer is doing good. Oh, each and every stock except Punawala also made a high of 375. So if we look at the weekly performance, each and every stock is doing great. It is in green candle, it is in green, and it is doing tremendously well. We have already told that when the Nifty starts growing, each and every stock will follow it. Even when the Nifty, when it was negative, we have done great, right? And and now we are seeing, even if the Nifty is falling its mark, even if the Nifty is doing stable as of now, the fifth straight season we have seen it is a green. So now we are looking, everything is positive, everything is positive for us. For monthly we can look, for 3 month we can look, everything was green, and now we are entering into the positive territory in last 1 week. For 3 months category, each and every stock has been down, each and every stock in our holding has been down, but for weekly categories, if you see, everything is positive. So we are very much positive as of now. Now look at the overall performance, right? So we are able to see, we are getting a good result in income statement, balance sheet, cash flow, technicals. We are able to look into it, the performances, but we will go for a chart as of now. And today we will do the analysis for one of our stock. So if we see, National Fertilizer is in green today. Poonawalla RBL Bank has fallen a bit, right? And Avantel doing really well from past few days. Avantel has been doing tremendously well. Dev Plastic Industries is negative. Hindustan Oil Exploration is negative. GGBL is negative as of now. IPRIG is negative, Arkiply is negative, and Annapurna Swadhyast is negative. So if you see, Avantel and National Fertilizers Limited are doing great. Poonawalla, RBL, Dev Plastic, Hindustan Aerospace are negative as of now. So we are expecting it to consolidate at this position, and then it will grow more, right? We, each and every one of us here to grow our money more. Also, we want to encourage you that do communicate with us, do uh, interact with us, right? Do interact with us, and we will be able to guide you accordingly, right? We'll be able to guide you accordingly. The more problems we will understand of yours, what are the problems you are facing. Many are experienced investors in the market, so they won't be having much of a problems to understand our terms. But for many of you who will be not able to understand our terms, will be guided, will be provided with recommendation, and will be handholded, right? We are not here only for the experienced investor, we are also here for the new investors who are trying to get in the market. So just let me know how many of you are experienced investor by typing one, and if you are a new investor, just type two in the comment section, so we will know and provide you with the context, right? So this was the overall performances we have as of now. The Poonawalla has been doing great, but now it has taken a dip. It is consolidating at this position, right? The RBL Bank, overall it is positive, but from its opening price, it has gone a green, right? So these are the conditions as of now. And looking at after the returns which we have made, so these are the holdings, updated holding we have. For today, we have provided with the date of position establishment for Hindustan Oil Exploration, RBL Bank, again we had entered into the Hindustan Aerospace. We have entered Hindustan Aerospace thrice on 3rd of October, on 15th of October, and on 26th of November. This is the uh, on the level of 236 to 118 to 220 and 190 192. So these are the three levels where we have entered the Hindustan Aerospace and made an average. Right, averaging out is very important. For those who are new here, we will explain the averaging out. What we do, suppose we had our made our entry at 236 and we had our main entry at 218, so the average price comes out to be and the 190. So the average of this will be, let me calculate, average of this will be 190 plus 218 plus 236, right, and divided by 3, so average comes out to be 214. Even if the stock reaches the level of 214, we will be making average out of it. We will not be lost if we cut that position on that, but we are not here for protecting our capital or protect us from our loss. We are here to make profit. So if we exit at 236 also, from our first buying price we will be able to make profit on it. So that is the most important thing in any stock, that we are averaging out, and once we gain that price we are able to exit at that position, right? We even don't have to wait for the 5% profit level. We can be exiting at 236 and making huge profit out of it. So RBL Bank, we had entered at the 200 levels, and again we made an entry at 150. So RBL Bank has been doing great. Now it is increasing from its below level of 150. We are seeing RBL Bank increasing a bit. Right, RBL Bank is doing great. Just look at it. Look at the charts of RBL Bank. RBL Bank is doing great. RBL Bank is doing great from its 5 days. If you see, RBL Bank has been increasing a lot. It has made a low of 150 just a few days back. On 2nd of December, it has made a low of 147.73, and on the 5th of December, we are seeing RBL Bank reaching, making its high. It has grown 20% from its, sorry, 15 to 18% from its lower level. So just look at the potential. RBL Bank is bouncing back from the level of 150. Down the level of 150, RBL Bank has bounced back, and now we are seeing very much positivity in the RBL Bank. So these are the few stocks which we recommend and go through the analysis. And just we go to the Avantel. Avantel, we are very curious about the Avantel. Why Avantel is increasing? So Avantel we have as of now, right? Avantel, if we see, Avantel has been doing great. Avantel has been doing tremendously well from its level of 153, where we have made a profit, 5% profit. Now we are able to generate a huge amount of profit in Avantel. Just look at the potential. We are getting 170, 175 rate as of now in Avantel. So Avantel has been doing great. Avantel is showing some bullishness in it. Even after making profit, we are able to make huge profit in Avantel. Right. Now coming to our second, Poonawalla, we have our entry at Poonawalla at three positions. Now it's okay, right? We have seen a low in Poonawalla. We have seen a highs in Poonawalla. There has been low lows and high highs made in Poonawalla. Right, and the Arcade Ply, we have already talked about the plywood wood industries, its rivalry, each and everything, green panel, the library, which and everything. We have done the fundamental analysis. Today, we will go for the analysis of Aventel. But before, we have to look our profitability. What are the tracking sheets we are having, and what are the profitability which we have generated till now? So, so these were the stocks which we have provided from 18th of September till now. Till yesterday, we have booked our five stocks yesterday, and we were doing tremendously well. We have, on yesterday itself, we have booked a profit of 30% for each and every one of you. Those who have taken the positions from our call, our recommendation, everyone is profitable till now, and till date we are very much profitable. In just 2.5 months, we are able to generate you with the profits of 227% profitability, right? So here, if we look, the stocks which we are providing is very much is very much important for each and every investors to invest their money in, right? We are not here to make losses, we are here to make profit, we are here to make money in the market, we are here to make money, not lose money, right? So that is the most important thing in the market. Each and every one of us who invest in the market is here to make money. Just remind, each and every mistake you make in the market, each and every mistake you make in the market is faced by the financial burden. Suppose you took a wrong trade, your money is gone, nothing can stop that. Just understand the difference. One wrong mistake, money wiped out. The portfolio is wiped out. If you're not on the right guidance, your portfolio will be zero. If you're trading options and not getting the guidance, you're not putting a stop loss, your portfolio will be just vanished like anything. So the most important thing we have is to invest your money in the right way and gain insights and gain more and more money out of it. So today we will do the comprehensive fundamental analysis of Archiply industry. We will also go through the web pages we have. We will also go through the web pages. So here also we will do the Archiply industries analysis. We will go through it. We will go through some charts. Okay, so each and everything. Suppose we are not getting anything in that ticker tape side, we will getting in the Research 360 site of Motilal Oswal. It is one of the prominent brokers in India, and we can get it here. And after that, we will do the fundamental analysis. So this was our profit taking strategy. Till now, we have made huge amount of profit for our clients and generated greater returns. The last just few days, last yesterday only, we have made a 30% profit for our clients, and back that week, profit was generous 20-21%. And overall, if you see in the month of November, we have generated 91% profitability for you. Just think about the profitability we are generating for you. So overall, if we see, we have generated a profitability of 227% in just 2.5 months, and we have closed only 37 trades as of now, but we have generated a returns of 227%. So just think about the amount of money you could have generated, amount of wealth you could have generated, amount of profits you could have generated by just following our recommendation coming on the live streaming session. Each and every calls, each and every entry points, each and every take profit market, we provide it on our entry points, and the directions are long. And that is the most important thing, right? And we have also booked profit out of it, and that is the most important thing in any market. We are here only to make money, not anything else. So just remember that. So coming to the fundamental, comprehensive fundamental analysis, we will do the comprehensive fundamental analysis, the 360-degree analysis of Archiply. If we look at the income statement, we have for revenue, we have compared the revenue, and we look what are its analysis, what are its expense. We will go for the analysis. You'll just look at the income statement. Just coming to the income statement, as we have seen that revenue part is increasing, revenue, it is in growth. We will go to the normal view because we will understand what are the revenue it has instead of the growth it has done. Revenue part is doing great from 307 crores. It has gone to 438 crores. Just look at the revenue growth, and the profitability, net income has not increased much as of now, but the revenue part is doing great, and EPS is also doing low from 4.25 to 3.75. So this is the revenue growth. The balance sheet, if you see the balance sheet, the total assets have grown from 199 crore, approximately 200 crores, to 326 crore, and the liabilities have also increased a bit. But as compared to the assets, which we have seen the growth from 199 to 326, assets has been increased by the 126 crore, and liabilities has increased by 108 crore. But if we see in terms of growth percentage, the asset has increased a little less as compared to its liabilities. Right, assets had increased a little as compared to liabilities, and total equity we see 92,103,111. So these are the things which we have. The total liabilities and shareholder equity, if you see, it is 199, as similar to asset. It has the liabilities and shareholder equity, and common shares outstanding are 1.99. It is constant. So these are the net change in cash inflow we have from 2020 to 2024. There has been net change in cash, and the cash flow is decreasing. So it is a positive sign. And now we will look at the analysis. What analysis for the we have made for the income statement analysis. This is the income statement analysis we have as of now. For revenue part, the revenue has increased from 306.3 to 448.4 crores. And analysis, what we have, revenue growth grew by 46.4%, and indicating a strong top line performance driven by market demand or effective sales strategy. So they have come up with the effective sales strategies. However, the growth is decelerated in 2024 as of now. If you see, the growth has been decelerated due to some maybe some demand was not driven, right. Previously there was a performance driven demand, so that was the most important thing. If you look, SG&A increased from, like, sales goods and appreciation have increased from 36.19 crore in 2022 to 42 crore. It is a increase of 17.33%, right? And there has been rising expenses, especially marketing area, may reflect investment in growth, but also pressure on margin. So, if you look, there has been rising expenses in marketing, R&D, or labor, and it's also reflect investment in growth, but also put pressures on margin. So, it is very important that we see there has been rising in expenses, especially the marketing, R&D, research and development, or labor. It also reflect the investment growth, but it also puts a pressure on the margin. Even if you are generating a lot of profits, and if you are not giving it to the investor will be cautious. It has to be there in the income statement, and we have to grow our marketing part, R&D part, according to as our income grows, or investors will be remain cautious on that. And coming to the gross profit margins, we have profit margin. Gross margin of was is stable. Declining is suggested that there is an increase in raw material and production cost. For the gross margin, there has been decline, right, because there is a rising raw material cost and production cost. And declining margin, it is also affecting the operational efficiencies in, because the profit operating margin is decreasing from 5.23 to 3.01%, right. 5.23 to 3.01%, and net profit margin is doing it, is also decreased. It also reduced profitability because there has been a higher interest and tax burden on the company, and there has been reduced profitability going on. So if you see non-recurring item adjustment for any expenses are necessary to assess sustainable income, right? We have to adjust for any exceptional items and assess the sustainable income. Objective: while revenue growth is promising, what we have come to the objective after analyzing the income statement. Revenue growth is promising. If you see, revenue growth is promising. Declining margins indicates cost management issue that need answer. So revenue growth is promising as of now. The revenue is growing, but margins decline in a company is the strategy with the management is following is showing some issues, right? The revenue is growing, the management is but not showing efficiency in generating the uh, profitability. Now we will come to the balance sheets, assets and liabilities. Right, we will look after the assets and liabilities part in the balance sheet. So So we have balance sheet as of now. The assets have increased. We have already discussed. We will go to the balance sheet and discuss what we are doing now, what analysis we have come upon. So balance sheet analysis, if you see, current assets are accepted. So these are the balance sheet analysis. Assets are expected to have supported revenue growth. Asset turnover for efficiency. Asset has been increasing as we have discussed. Liability also increased from 40 to 70 crores in 2024. It has been increase of 75.3%, and contributors are present in interest expenses. The liability is also contributing to the rise in interest expenses. So these are the balance that we have. There has been increasing assets, but the liabilities have also increased much, and due to that, we are seeing a sharp rise in interest expenses from 4.03 crore to 7.06 crore. There has been increase, which amounts to increase of 75.2%. So key ratios are the debt to equity ratios. Rising debt levels suggest more leverage position, increasing financial risks. Now we have come up to a point that we are seeing there has been increase in debt level. There has been increase in debt level, which also increases our financial risks in the company. So that has to be taken care for our wellness, right? An objective we have, the company shows sign of over leveraging, requiring careful monitoring of debt repayments capacities. So, company is showing a sign that it can repay the over leveraging, which require careful monitoring of debt repayment capacity. So, we have to look the company which is generating a profitability, it is reducing down. Revenue is showing a good sign, but we have to look what the company is doing and how the growth is performing, right? And we have to also look the leverage which it is taking from the market, it is going to repay that or not. So these are the analysis for cash flow. We had operating cash flow, it is positive in 2022, indicating operational efficiency. In 2022 it was positive, and now it is reducing a bit. So it is a good sign. From negative we are seeing a positivity in the cash flow. The free cash flow in 2024, if you see, it is minus 53.45 crores, signals heavy capital expenditure or declining liquidity. So, free cash flow, we are seeing heavy capital expenditures are going on and liquidity is going down. So, this is the concern we have for future free cash flow. So, overall cash flow analysis, if you see, the objective is company must stabilize the cash flow so that they are able to sustain operations without relying on debt. For not to be relied on debt, we have to sustain our cash flow. We have to look the business is generating a cash flow or not from its business, so that we are able to generate more returns for them, right? We have to look the business is doing great or not. So that is more important thing. And now we will come to the industry dynamics and peer positioning. We will first go to the web pages to analyze it, the whatever the information we have from as of now. So if you look at the peer and comparison, the valuation, Archiply have a very low P. Just look at it. Archiply is very having a low P as compared to its competitors. 52 is having for Century Plyboards, Green Panel, Green Ply Industries. These are the major companies we have in India, right? Which are trading at a higher P. People are optimism about the plywood industries, the wood products and materials, right? And the price to book ratio is low for Archiply as of now, 2.09, and for its peers it is 7, 3 and 6. So it is doing great as of now. So we have to look what are its peers doing now. If you look at the technicals, the volatility is been high for volatility is high for Arcade Ply, but the RSI is below 70. So we can assume that we know that our Arcade Ply industry is not in the overbought zone. Arcade Ply industry is not in the overbought zone. So we are able to analyze it properly. And Century Plyboards, Green Panel Industries, Green Ply Industries is having a RSI below 70. So the peers are also in not overboard zone. We can be assured that the uh, when the momentum take place, the arcade ply industry will gain its momentum. Right, the comparing the price comparison, we have Arcade Ply is 46.48%, Century Ply is 4 point. So if you see, there has been only increase in the Arcade Ply is only doing great in terms of the stock performance. For rest of the stock, Century Ply and Green Ply are not performing well. So that is a positive sign. People are positive. There is a low PE for Arcade Ply. The stock performance is good. And now we will come to the conclusion what we have for now. So this is the industry dynamics and peer positioning. What are its industries? So the industry dynamics, we have witnessed a demand in market growth which is driven by urbanization and infrastructure development. There has been lot of urbanization and infrastructure development going on in India, right? There have been lot of real estate boom. There has been lot of development. When we make houses, when we make anything, offices, we require wood products to be there in our offices. So automatically the demand goes up. So when the industry demand goes up, the automatically the players in that industry will be facing good positioning, right? And trends, there is increasing preference for sustainable materials. So there has been increasing uh, for arcade ply. It is very better if that put that R&D and innovations in their product, it will be automatically increasing in that. So peer positioning, if you see, compared to peers, Arcade Play revenue growth aligned with industry trends but lack in profitability. As we have already told, Arcade Play revenue is going up, but it lacks in profitability. It has not been it has not been able to improve its profitability because the profit margin is going down. Margins are thinner than large competitors, right? Margin is not good. We have to look how market play unfold that and makes it profitable. How the market uh, margins are increasing. We have to look after the inventory and the supply chain management system, how the management is looking into the supply chain, so they are able to store the inventory in it and able to utilize that inventory for the long term at a cheap, buying at a cheap price, and make their margins grow, right? So this is the important factor we have to look in the uh, market play. Now margins are thinner than large competitors like Century Plywoods or Guinness Ply. So we have seen margins are thinner. Now we have to look its peer operational efficiency is also low. So we have to look that operational efficiency is increasing and cost optimization is necessary to compete effectively. So the cost optimization is also important in the market. They also have to look how the cost is placed so that we are above the level of our peers, and the operational is also important, the margin also important, so they remain profitable, their revenue increases, their net income increases, net profit increases, and their efficiency increases, so that they are able to grow in the market, right? As we know, the stock market is a slave for profit. As the profit grows for the market, we will see the stock price following its way. And what are the objective we have come? We have came to gain to gain a competitive advantage for our arcade play. It should prioritize on cost control and innovation. We have already discussed that. They have to look about the cost controls. They have to look about the inventory management, and they have to look in the supply chain management. If they are able to do good on that, we will be seeing it will be gaining it in competitors. The products will be sold more, and we will be gaining by that. And the innovation is also important. So we just look after the financial ratio. We'll go to the financial ratio, just digest this point for a bit what we have discussed and go through the financial ratios. So coming up to the profitability of a company, as you have discussed, it has been average as of now, and it's ranked 7 out of 11 stocks. So return on equity is 5.6.58%, and it scores 4 out of 10. Net profit margin is 1.62%, and it scores 6.6 out of 10. And cash flow is 2.61%. It scores 6.7 out of 10. Uh, the entry point which we have as of now, the fundamentals is less than intrinsic values. As we have discussed, the fundamentals are less than intrinsic value. We will come to the value which it can be shown, and from where it should grow. And it is also a good time to enter because it is not in the overbought zone. Now coming up to the, we have seen the fundamentals. Now we will go to the analysis part of it. So financial ratios and peer comparison. If you see the profitability ratio declining due to reduce in net income. So return on equity is declining because there has been reduce in net income. As we can see, there was a decrease in net income from 8 to 10 crore, and then from 10 to 7 crores, even after the revenue have increased from 300 to 427 crore, but the net income hasn't increased. So there has been effect on return on equity for that. And return on assets are also low as compared to its peer. The peers are increasing their assets day by day. We are seeing that assets have been increased, but also the liability. Assets have been added 120 crores and liability has been added 100 crores. So that is a serious concern. For liabilities, we have to pay the interest payments that reduces the net income, and that is not a good concern for any stock market person, right? And for liquidity ratio, it is showing stable liquidity despite increase in expenses. So current ratio is good even after having a increased expenses in interest payments and increase in liability. We are able to see a stable liquidity in the company, which also shows a little bit of efficiency. But more efficiency will come out when the uh, when there is a less margin pressure and the in it will is doing great. So coming to our liquidity ratio is done. Efficiency ratio, as we have discussed, as we have known, as we have come to discuss, that inventory management is very important for this industry. If they are buying the raw materials at high cost, they will be making producing at a high cost, and the selling, the margin will not be up to the mark, and they will be not be able to generate profit despite such innovation, each and everything. If they make raw materials at a high cost, so they won't be making profit out of it. So this is the inventory management. We have to look, there is an efficiency. They are able to take the products in their inventory, they have to manage at a low cost, they have to buy the raw materials at low cost and produce at a low cost, so the margin increases and they are able to make profit out of it. If we go to the valuation ratios we have, it is relatively high, which indicates optimism. If we consider the big players, it is okay, but if we consider the all the industries player, it is high, but it is supported by earning growth. The earning growth we have, it is supported by that. Now we will go to the analysis of SWOT analysis. We will do the SWOT analysis, the most important analysis in any stock. So, for SWOT analysis, we have come to a strength of the company. For the strength, we have seen company is able to generate net cash, improving net cash flow for last 2 years. So, company is improving in net cash. It is generating a positive cash flow even after facing all the circumstances, all the problems it has. Book value for share is also improving, and it has zero promoter placing. That is a very good sign. Promoters are not placing much in the stock. Promoters are doing great. Weaknesses, we see there has been declining profit every quarter for past 4 quarters. There has been declining profit for past 4 quarters, and profitability is not increasing because due to the margin pressure. We know the inventory problem is there, so the profitability is declining. Once it goes to a good level, we will see an increase in it. Now, opportunity is that the stock is with good low PE, but that is not only the concern. PE ratio should be good so that we are able to buy at a good price, right? SWOT analysis. The threats, coming to the threats, company increasing debt as per annual report. There has been increase in debt. We have seen there has been increase in liability. The interest payment is increasing, and increasing trends in non-core income. So this is a serious concern we have uh, for Archiply. Now look, what we have discussed, there has been robust revenue growth plus 46% from last year. So it is a very good sign of strength and presence of growing sector with a demand for quality products. If Archiply has to grow, we have already told that uh, it has to put its businesses into the R&D. It has to develop the R&D. It has to put into the innovations. So the quality of product is being generated, and they are able to grow in the market. If they are not, we have seen many industries, many companies coming out which have not shown innovations, and they have lost in the market of today. We have seen Nokia. It is the best example. We have Nokia. It has not gone to the innovation. It was stick to it. Even if you know, there was a camera company, I don't remember as of now, but for Nokia you can consider it has been declining. The other businesses, the Apple, Androids are taking over because the Nokia has not invested in it. Once upon a time, there was people who only use Nokia, but as of now, nobody. Almost the market share have fallen down are huge. Like it is almost wiped out from the market as of now. We don't see people using Nokia as of now, and most of the people are switched to Apple and Android, which was not in the market when Nokia was ruling the market, right? So this is the important thing. Innovations are important in the market. When you are not innovating your things, you are not putting your in research and development. That brings down the market for you. And what you have seen in the weakness, there is a declining margin across groups, across gross operating and net levels. So this is a weakness. Margin has been declining for all over the stocks, each and everywhere. Raw material we are buying at a high cost, the margins which have decreased a lot, and there is a overleverage position with rising debt and interest expenses. So the leverage position is also increasing with there is a rising debt and interest expenses. So this is the most important thing. We shouldn't be having over leverage, or it would be creating problem for you with rising debt and interest expenses. What are the opportunities we have? We have, like we can say, in this industry there is eco-friendly product. If it is doing expansion in sustainability and eco-friendly products, that is good. And penetration into the untapped geographic market. So now the target price is going to the tier 2 and tier 3 market. If it expands more into the tier 2 tier 3 market, it will be growing a lot, because tier 2 tier 3 markets of people are also getting developed, and they are developing themselves and generating the revenue. Threats, what we have a threats now, there is increased competition from established player. There is an established player in this industry. We all know the name of Greenply. We all know the name of Green Panel. These have been established player as of now in the market, and they are doing great. They are doing great out of it. And at the last thread, we have rising raw material cost and tax burden. If there is a rising raw material cost, if there is a tax on wood products put, so it is a serious threat for each and every one of us, and we will be able to see that it is in pushing pressure. Now, what are the future outlooks we have as of now? So we have to look into the growth drivers. It has continued demand for building materials in urban and rural projects. So if you see, there has been development in the urban and rural projects, so there will be a demand for building materials in, right, and there will be demand for wood products as well, and there is been potential for market share growth through product differentiation. So we have to look how it is differentiating from its competitors, and it is the product is differentiating, right? Macroeconomic factors we have, there has been rising interest rate could increase borrowing costs. So when the interest rate is rising, the company have to borrow at a high interest rate. That is a serious concern. Also the inflation also may put margin further. The inflation can put the margins further, because if you see the inflation is rising, so the cost of quality good products will go at a side, because people will prefer the first the necessity goods, then the luxury goods, and the wood products. If it comes to the quality, it is a luxury in Indian market till now. So the when we go for the necessity product, there will be luxury, there will be growth in luxury product as well. So now we have to look for the management guidance. Strategic focus on cost cutting and process improvement is critical. So we have to look how management is doing the cost cutting, and how there has been improving process improvement is critical, right? We have to look how why process improvement is critical, and the factors it has to do on the cost cutting. Raw material cost, it has to be decreased, so that we are able to do on that. Now we have to look at the objective. We have seen the long-term growth potential remains intact, but operational challenges must be addresses. So if you see, there has been operational challenges, but the long-term growth prospect for a stock for Archiply is intact, and we remain positive out of it, because the industry for wood products, the quality wood product is increasing, and Archiply is penetrating in the tier 2 and tier 3 markets. So that is a good uh, good potential, good growth it is having as of now. So before coming to the recommendation, we will see what we have done till now. As we are coming to the close of our session, last 10 minutes are left. We will just go through what were the stocks we are holding, and at last we will go to the recommendation part. Recommendation part will be at last, and we will close the analysis part. Right. So as of now, if you see, we have established some stocks code. We have told where to buy that stock, either in NSE or in BSE. As we have seen many times, some stocks are listed on NSE but not on BSE, and some are on BSE and not on NSE. So we are providing with the script code and exchange code where we can trade them, and we are also providing with the entry price, the profitability level, and the first target and second target price, you can see. And as of now, if we see, we have generated a profit of 227% in just 37 trades close in last 2.5 months. So we want you to remind you that this session which we are providing will be only available in free for next 2 3 weeks. After that, we will be going for the VIP mode. We will be going for the person who wants to make serious money in the market. As of now, we are gaining a lot of profitability. We have closed 37 trades as of now, and whichever stocks we are having in a holding, we will be able to close that soon. So as of now, if we see, there has been increase in profitability. Trades are closed for few stocks which we have as of now. We will look into that and increase the profitability for you. From next day, we will look what are the positions we can close. The market is doing great. Market has closed positions. Market have made a good high and good from last 5 sessions. The market has been consistently growing well. So if we look at the auto sum, we will do the auto sum of it, right? uh, just back of it, just remove it. So this was not covered, and till now what we have seen, that we have made a profitability of 227% as of now, and we have closed 37 trades. The profit which was generating down below was not covered up. We have forgot to cover up profitability. But if we calculate, and what we have added up to as of now is 227% profitability in just 37 trades. So just come up with us. We will be switching to the VIP mode in coming days. Before that, take most benefit out of it. And we also want to remind you that we are not only in the equity market, we are also in the forex market, we are also in the commodities market as well. So that is the most important thing. Many of you have a requirement that we are not able to make profit in equity market because our office timings are running, we are not able to trade during that. So for commodities market, if you know, the Indian market is open till midnight, and for forex we are open till 24/7. So people who are available at any point of time, we will be guiding them, and we will be able to generate profit for you, right? Even in the forex market, even if you have faced a loss in equity market on your own, right? If you are available for trading at the further timings after office, at midnight, at morning time, we are here to guide you and provide you with the recommendation. We are here to provide you the levels, right? We are here to provide you the levels and make most profit out of it. So these are the profits which we have generated as of now, and we are seeing a great growth in our profitability. Just today we have not booked any stocks, or any other day we have booking 2 3 stocks, 4 stocks, even 5 stocks. Yesterday we have booked after 4 straight green sessions, right? So we have to look what are stories unfolding in our stock. And coming to our last comprehensive analysis, the recommendations, what recommendations we have for archetype. Like, before that, we will go to the analysis which we have done. What we have done for today, we have done the income statement analysis, right? We have seen how revenue has grown from 306 to 448 crores, which is grew by 48.6%. The SG&A increased from 36 to 42 crores, a marginal 17.3%. And the profit margins is also increasing from 35. Profit gross margin has declined due to the rising raw material cost, and operating margin is also declining. Gross margin is declining. As you've seen, there is an pressure in profit margin generation because there has been increase in raw material cost. Due to that, there has been increase in gross margin, operating margin, and net profit margin as well. So there has been, if you look at the balance sheet analysis, the current assets are expected to have supported revenue growth, and assets are increasing, but the liabilities are increasing subsequently. Our liabilities have increased much more than that, right? And if we see the cash flow analysis, if we have it was positive in 2022, and the cash flow from negative, it is decreasing as of now, right? So but the free cash flow has been negative. It has been negative 53.545 crores, which signals heavy expenditures all declining. There's been decline in liquidity. If you see the free cash flow, so it has to stabilize, and it has to stop overlying on debts. The industry dynamics we have seen, the industry dynamics, if you see, the building materials are showing its demand, but the raw material cost is also increasing. So due to that, the profitability is coming down a bit, right? And peer positioning, if you see, there is overall Archiply is doing good in innovation. They are spending in R&D, which is a requirement for today positioning from its competitor to stay ahead, like Century and Greenply Industries. Now coming to the financial ratios and peer comparison, if we look, the return on equity is declining due to the net no income. Revenue is doing great, but the liability is also increasing, and the operational efficiency are not there. Due to that, return on equity is also declining, right? So if you look at the current ratio, it is doing good. The inventory turnover, uh, asset, it has a efficiency in inventory turnover. At least it is good in that. And the SWOT analysis, we have seen the strength, the weaknesses, opportunities, and threat. In strength, we have seen there has been robust revenue growth, which is showing demand, and also the demand for quality of product goods. Weaknesses, we can see there has been decline in profit margins, right, due to the rising raw material cost, and there has been increase in debt and interest expenses. Opportunities, what opportunities we have? Opportunities we have Like they have to invent more of it in eco-friendly products and penetrate into a geographic market, right? And threats we have from its competitors and rising raw materials and tax burden. Future outlook, we have seen the growth drivers which we had as of now. There has been demand for building materials and rural projects, as the we have already explained about that, and the macroeconomic factors are also important. And the management guidance, it has to put on cost cutting and process improvement is critical. So we have to look how management is assessing the cost cutting thing, and it is coming to a conclusion that we can how the supply chain and inventory is taking place, so that they can be well assessed on that. And what recommendations we have in last minute call: buy for long term investors, right? Given a strong revenue growth and market potential, the company is promising long term players if operational efficiencies are resolved. So it is a big buy because the revenue growth is increasing and the market has huge potential in it. And the company is also promising its long-term play operational efficiencies resolved. If we resolve the operational efficiency in the company, nothing has to be worried. The market is promising the potential, it is great. We have to also put the risks. What are the risks available? We have to monitor the depth level. What are the depth level it is having? The depth is growing or reducing. The interest payment is growing or increasing. The margin, we have to look at the margin, the revenue which is generating, the net income is increasing or not, the profit is increasing or not. We have to look at the margins, what are the margins it has. And we have to look at the cash flow stability. Cash flow is been very stable in this stock, so we have to look at the cash flow stability which we have as of now. Valuation, uh, it is appearing fairly valued. Entry at dips is recommended. If you see it is consolidating at this price or even dip occurs, we have to buy the stock and enter that. Now, conclusion: Archiply have a growth-oriented company with challenges in cost management. We have to look how it is managing the cost and its profitability. Addressing this issue will be significantly enhance shareholder value. So we have to look how management is taking a decision to increase the efficiency, to increase the profitability, so that we are able to see an increase in growth. And how it is able to manage its inventory. So for as of now, we can consider buying the Archiply industry. We have come to a recommendation, and now we have also provided investment decision. What are the conclusions we have for Archiply? So uh, we have done all the 360-degree analysis for you from top to bottom. The 360-degree analysis we already speak, or we always speak about, from top to bottom approach, analyzing each and everything which a stock, which a fundamental analysis can hold importance, right? So as of now, we are coming end to of our session. Just do remember, for all these insights which you have got, you are able to digest and make it and make your investment decision wisely. Till then, for stay tuned for the next live session tomorrow. Till then, be happy investing and make money. Make